I'm Lindsay Dreyer, founder of Happy Agent Co., where we empower women in real estate to build financial independence, lead with authenticity, and create joyful lives and businesses. Each week, I'll bring you bold conversations, actionable strategies, and the inspiration you need to build a business that supports your life, not the other way around. This is the podcast for women like you who want more than success. They want freedom. They want to make an impact. And more importantly, they want to do it all without sacrificing their happiness. Welcome to Happy Agent Co., where success is unapologetically yours. Welcome to part 1 of my 3-part spring cleaning series for real estate agents. We are going to cover the 3 areas of your business that you need to spring clean. And today we are diving in to one of my favorites, your financials. We are going to talk about getting your money in order because spring cleaning is not just for your closet. It is also for your bank account and your financials in your real estate business. I know so many real estate agents who avoid money or their numbers, and they just have commissions flowing in and out of their bank account. They are not paying attention to their cash flow. They have no idea what their profit margin is. They don't even have a profit and loss, to be honest. Like, the only time that they kind of get it in order is for tax time, which it basically is coming up or has passed, depending on how you're organized. So today I want to give you my tips for getting your financials in order as a real estate agent so your business can start growing and you can start measuring and paying attention to what matters in your business. So let's chat about why your finances need a spring clean. Money is the biggest source of stress for most real estate agents, and it is a huge reason on why they feel overwhelmed. When you don't have control over your finances and your numbers, your business controls you, or the lack of business controls you. So cleaning up your financials is not just about making more money, it's also about keeping more of it and using it to build long-term wealth, which is what you should be doing if you are in real estate. That is how you eventually exit the business, because let's be real, most of us do not want to be selling real estate when we are a 85-year-old granny. I know I did it. I do not. I know my grandma did that, but I am not interested. So let's roll up our sleeves and get into the 5 things you need to do to clean up your finances this spring. Step number 1 is you need to know your numbers. And this is really all about getting organized. So if you do not have an accounting system or a bookkeeper, I want you to go back to your 12 months of bank statements, 12 months of credit card statements, and categorize every single transaction that is related to your real estate business. We also need to know what's coming into your business. So you can pull that from your bank statements, obviously, but your brokerage should also have some type of accounting system showing what they have paid you. And this seems very simple, but so many agents get stuck on this. And I know a lot of my coaching clients are just like head in the sand about money, but we really dive into this when we work together, which is we need to know what's coming in, which is your income. We need to know what's going out, which is your expenses. And having that information helps us identify what your actual profit is. And then it also helps us identify what your profit margin is. Now, why I like the profit margin number is because that is something we can track on trends. Because even if your profit is going up, it's showing how much more profitable you are or how much less profitable you are. So knowing your profit, the actual cash, is super important, but knowing your profit margin is also important. So how do you actually calculate a profit margin? It is your profit, so that income minus expenses, divided by your gross income, which in our case as real estate agents is your gross commission. And if you want it as a percentage, you multiply that by 100. And that is pure and simple, the down and dirty of it. I have people ask, what is a good profit margin? And I think that just depends on what type of business you're running. So if you have a brokerage, if you have a teamerage, if you're a solo agent. It all depends on what type of business you're running, what your expenses are, what your return on those expenses are. So I would say there really isn't a set profit margin, but it is a good thing to track because you want to make sure that it is improving over time, or it's just trending in the right direction or staying stable. One of my coaching clients I worked with thought that she was making six figures because her income coming into her bank account was six figures. But after we broke everything down, I gave her the template to do her profit and loss. She realized that her take home was way, way lower than she expected. So if you don't know these numbers and you're not tracking it on a at least quarterly or semi-annual basis, you are flying blind in your real estate business. It is so important. So my action step for you for knowing your numbers is pull up those bank statements, pull up those credit card statements right now. Let's list out your monthly revenue, expenses, and what's actually left over after everything's being paid. If you are already ahead of the curve and you have a bookkeeper and you're in something like Xero or QuickBooks, pull that up too. We want to get a list of all of your income and all of your expenses so we can move to step 2. Speaking of step 2, it is all about cutting the dead weight. We want to reduce your unnecessary expenses. So are you paying for tools that you don't use? I'm sure you are. We all do. As real estate agents, we definitely go for the shiny object syndrome. We love shiny objects. So audit those expenses. Are you paying for something you don't use? Are you paying for something that is not giving you a return on your investment? I am going to tell you, you probably have at least a handful of things. Cancel those subscriptions. They do not serve you. You do not need them. The other thing is stop impulse buying things that you don't need. Courses, software, lead generation tools that aren't giving you a return on investment. I can't tell you how many coaching clients I have met that are paying for lead generation that it is not giving them a return on their investment. Stop it. Just stop. If you are not taking advantage of everything you are purchasing in terms of courses, software, lead gen tools, stop paying for them. Just stop doing them. I'm giving you permission right now. Cut it out. I remember I had a client who was spending $800 a month on 3 different platforms that were essentially acting like a CRM. And she kept jumping to the next best thing and just realized that there's so much redundancy. So technology and systems, there is a lot of tools out there that actually start doing more things. So software is ever evolving. I know that our CRM, at one point, we realized we could send our email newsletter from it, whereas that was like a new functionality. So we were able to drop our email software and save our brokerage $8,000 a year. So software is evolving as well. So if you haven't revisited your tech stack or the software you're paying for, maybe it does something. Maybe it has a new feature that's going to allow you to cut out another piece of software or another expense in your business. So this is your step number 2. You are going to go through your bank statements, your credit card statements, highlight every subscription or tool, and really think, do I need this, or do I need to explore if one of my existing tools can replace this one? And I am going to give you permission to just go ahead and cancel that today. The other thing is not only cutting, but let's say you love a piece of your software. So for example, Calendly it is one of my favorite tools, one of my favorites. You can also experience some savings by just going to an annual plan. So if you're monthly on something, going to annual can also save you some money. So I would only do that on things that you know you're going to want to renew year after year, or you know you want to commit to for a year. I personally love doing subscriptions on a month to month until I know that I really love that piece of software. But going month to month at first has saved me so much money, because after a month of using it, I realized I don't like this. This isn't what I expected, or I'm not going to use it. So those are my tips on subscriptions, cutting the dead weight. Step number 3 in spring cleaning your business is you need to figure out how to pay yourself like the CEO that you are, shifting from commission-based chaos, which, let's be real, is total chaos. We have that huge influx in the spring and summer, and then it's like, what the heck's going on the rest of the year? So we need to stop treating commission checks like a free-for-all. Setting up a separate business account, paying yourself a set salary, even if you're not really W-2ing yourself, but just pulling out $8,000 a month or $10,000 a month and paying yourself that. Getting used to having stability in your income, which admittedly is very, very hard when you are a new agent and you are still growing your business. Do your best. Maybe you just start with $2,000 a month. My advice is look at your profit from last year, divide that by 12, and then that is what you are going to pay yourself this year. And then obviously, if at the end of the year you make more money, that's lovely. But I think that most people are going to do the amount of business they did last year. So I would go ahead and do that. The other book that I really like is Profit First. Admittedly, I do not follow the full method, but it is a really interesting book to read because it will give you an overview of how you pay yourself first. And I honestly follow a more simple version of it. I do not set up all the bank accounts, but I still think I learned a ton from that book and highly recommend it because it is so important that you pay yourself first. I know too many agents that ride the commission roller coaster where they have a big check, they pay it all to themselves, they spend it, and then they have dry months. So when I switched to paying myself a set amount every 2 weeks, just like an employee, quote unquote, of my business, it was a huge game changer. It basically got me used to just having a consistent income, which I think is so important to being the CEO of your business. So action step on this is figure out that salary amount that you're paying yourself either every other week or every month. Your business needs to run like a real company, not a side hustle. The number one mistake I see real estate agents make about their finances is preparing for taxes. You can avoid tax season stress and those surprise bills by just being prepared. So let's set aside a certain percentage of every single commission check for your taxes. Have a separate bank account for your taxes. This is a tax account. 25% to 30% is a good rule of thumb, but again, everyone is different. So if you have questions on what you should set aside, ask your CPA. I like having that separate tax account because if it's out of sight, it is out of mind. And then you can just know that when tax time comes every quarter, you can just immediately transfer that money. Now, I would do this automatically. So if you have the option with your brokerage, which a lot of them do, you can actually have them just take that 25%, put it into your tax account, and then the remaining 75% goes into your business account. So I love things that are automated because honestly, when people are involved, we're just going to mess it up because we get busy. So if you can automate that tax savings account, it is crucial to making sure that you are ready for tax time. If you do not have a CPA, this is another one. Get one. I don't care if you think you can't afford it. They are worth every single penny. A good CPA will save you what their fee is. And they are priceless to being organized for tax time. I have seen way too many agents get surprise tax bills to the tune of $50,000 because they forgot to save for their taxes. And if that's you, this is your sign that you need to get serious about tax planning. And this is something that I absolutely think is crucial to running your business like a CEO. You need to be on top of your taxes because tax liens are no fun. So your action items today, if you do not have them, open a separate tax account today. You can go online. I love RelayFi. I just opened a bunch of accounts with them. It's super easy. I will put their link in the show notes. They let you set up as many as you want. So I have 5 accounts for a bunch of different buckets in my business. Highly recommend them. They also have a high yield savings account, which right now is getting about 3.7%. So definitely get that in order and check the show notes. I will put that link. And my last step 5 on getting your financial house in order for spring, we are spring cleaning. Do you know that feeling after you're done cleaning and everything just feels so good? Like you're just so excited because you just made so much space and room. This is step 5. We are going to set some wealth goals that feel exciting because you have created space with steps 1 through 4 in your business. We are shifting from surviving to thriving. So you're going to be building wealth, not just income. So I want you to ask yourself, are you actually building long-term wealth, or are you just working deal to deal? And what this requires is that you set goals beyond just making more money. I want you to think about investments, savings, passive income. And I think it's so important that you invest in real estate because that is what we know. That is how I have built most of my net worth, is through real estate. Honestly, it is one of the best ways to build wealth, especially in this unpredictable environment. I have my tenants who pay my mortgage, and it is going to be paid off in 15 years or 17 years or 30 years, depending on what type of mortgage you got or how long you've owned the property. But getting that principal pay down every single year on my rental properties is building wealth. So not only am I making money each month on those rentals, but I am building wealth through that principal pay down. You also get tax deductions for owning rental properties. So I am a massive fan of real estate agents owning rental properties. Also, invest in the market, stocks, your retirement account. We do not take advantage of these vehicles, but this is literally how you build wealth. This is how I have got to the point of having a net worth over $2 million, is real estate, putting money in the market, and being responsible with my money. I am a huge proponent of money is power, and real estate agents need to realize that how they use their money is going to set them up for success and for an incredible retirement. We have such a unique opportunity on our hands that we can make as much money as we want to. But it doesn't mean anything if you are not saving it and you are not building wealth for the long term. So I want you to decide on your wealth building goal. It might be buying a rental property, maybe it's starting an investment account, or maybe it's just setting aside a percentage of every deal for your long-term savings. But I want you to pick one and take that first step today, because I know too many real estate agents who have made multiple 6 figures for 10 years, 20 years, and they literally have nothing to show for it. And I do not want that to happen to you. So here's my quick recap on spring cleaning your financials in your real estate business. Number 1, know your numbers. You have to look at your income, your expenses, your profit, and your profit margin. Cut the dead weight. Cancel anything that's wasting money. So find the waste and cut it. 3, pay yourself like a CEO. You need to stop the commission roller coaster and pay yourself a set salary. This does not mean W-2. It just means a consistent income. 4 is prep for taxes. We do not want to be set. Number 4 is prep for taxes. We do not want to be surprised at tax time. So set aside that money now and not later. And 5 is set your wealth goals. I want you to build long-term financial security. So whether that's through rental properties, investing in the market, or just having a long-term savings plan, you need to be working on your long-term wealth, because you do not want to be 85 selling real estate. So if you do one thing today, I want you to pull up your last 3 months of statements and start cutting out the waste. Your business should be making you money, not draining it. So let's start building wealth the smart way. If this episode has helped you, please share it with another agent who needs a financial reset. And please don't forget to subscribe for the next episode in this series, where we're going to tackle how to spring clean your systems and your tech in your business so it runs smoother than ever. Until next time. Thank you so much for tuning in to this episode of Happy Agent Co. I hope you're feeling inspired and ready to take action to build a business and a life you absolutely love. If you enjoyed today's episode, it would mean the world to me if you could share it with a fellow agent who might need to hear it. Also, don't forget to hit the subscribe button, and if you are feeling generous, leave a review. Until next time, stay happy.